If you're waiting for mortgage rates to crash, home values to plummet, or something else crazy to happen in the real estate market here in the second half of 2026, I have good news and I have bad news. The good news, I think opportunities are increasing. The bad news, I don't think we're getting the dramatic changes a lot of people are waiting for. Hi, my name is Elise, and for the last 10 years, I've been helping families in Plainfield, Oswego, and the surrounding Chicagoland suburbs make great decisions about real estate. So here's what we've learned so far in 2026. Interest rates have remained stubbornly high, much higher than a lot of people, including myself, anticipated that they would in this year. Buyers are much more sensitive to those higher interest rates and the higher purchase price of homes due to the fact that gas is expensive, groceries are expensive, and everyday living has just gotten significantly more expensive in the last few months. Inventory numbers have improved in a lot of the western and southwestern suburbs, but the majority of that is due to new construction and not actual resale homes coming on the market. And finally, homes are still selling, but buyers are much more selective about what they're willing to work with and what they're not. Now, mortgage rates remain in the upper 6% range, and nobody anticipates that they're going to go down by any movable amount in the near future. That being said, I think we're still going to see homes coming to the market, and that's because life still happens. Families outgrow homes, jobs change, familial status pivots. Things are always going to keep the real estate market moving. And because of that, a lot of forecasts anticipate that inventory will continue to rise as we go through 2026. So for buyers, that means more choices and a little bit less urgency. And for sellers, it means more competition. I think that buyers are going to get a little bit more leverage. I don't anticipate that we are leaning into a buyer's market, but I do anticipate that buyers might have a little bit more negotiating room than we've seen in a while. Things like closing cost credits, rate buydowns, a little bit of flexibility in price and terms. We might start seeing those make a reappearance. I think that home values are going to stay pretty stable. I don't have anything telling me that there is a housing crash coming anytime soon. And here's why. We have very low foreclosure activity. We have extremely high home equity positions in most homeowners. And for the past 15 years, we've had very tight lending guidelines, which is helping to make sure that our mortgage industry stays strong, robust, and healthy. What I really think is that we're moving from home value appreciation being driven by scarcity and into home value appreciation being driven by the predictable standards of the market. The biggest mistake that I see right now is people obsessing over interest rates and ignoring everything else that's going on. Things like life timing and family needs, job changes, all of those things that normally pivot someone into a purchase. There's also a lot to be said about pivoting some of the equity in your current home into other debt repayment so that you have an overall better monthly affordability picture. Most people at the end of the day don't buy a home because interest rates are perfect. They buy a home because life happens. Right now, more than ever, national headlines are becoming less useful. Some markets are softening, some are ramping up. It really is changing from town to town right now, more than I have ever seen in my entire 10 years in this industry. But overwhelmingly for Chicagoland markets, I think we're going to continue to see stability and possibly some slight growth. So here's what I'm really watching as we step into the second half of 2026. Number one, mortgage rate movement. Where's it going to go? We don't exactly know. We have some information and some indicators that think it's going to be pretty stable, if not increase a little bit, but I'm going to be watching this really closely. Number two, inventory growth. Currently, especially in Will and Kendall counties, we're seeing inventory start to tick up, but that is almost exclusively due to new construction. I'm curious to see if we start to see resale inventory tick up as well. Number three, consumer confidence. So that's basically, how does everybody feel on a day-to-day basis? Can they afford things? Do they feel like they have wiggle room and room to adjust within their budgets? Number four, the job market. Jobs right now are continuing to move forward, but if you kind of get a pulse of the neighborhood and you look at the people around town, people are struggling to find jobs. And that absolutely affects our real estate market if it continues. And number five is seller expectations. If we start having a mismatch between seller expectations and reality at a widespread level, that's when you start to see home values dip as sellers don't adjust their pricing and their expectations to the current market. And when you have homes that are sitting on the market for a long time, due to that mismatch in expectations, that's when you start to see values dip a little bit. Right now, for buyers, understand you've got a little bit more choices, a little bit more opportunity, and I do anticipate that increasing as we move further into 2026, but this is not a housing crash by any means. And for sellers, list your homes properly from day one. Do not list high and hope for the best. If I had to summarize what I anticipate coming for the second half of 2026, this is what I'd say. We are moving towards a healthier, more balanced real estate market, not a boom and bust. If you're wondering what this means for your specific situation and goals, I'm always happy to have that conversation. Click the link below.